Wonderful morning to everyone. Welcome back to the pre-market outlook discussion for 20th March 2026. We are going to end the third week with a negative tone for Indian benchmark indices. Based on the yesterday's gap down open, that was really a carnage for our markets, which was not even predicted this much of gap down without having any signal. Even though it would be a gap down, it may be a limited towards 200 to 250 points only, but almost one-fold to two-fold of downward leg formed with that over 700 points of negative rally expect that would be anyway going to weigh on further upcoming sessions behavior as the structure totally collapsed because of the recent 22,955 low breakdown. Yesterday it was 22,930. This low, as long as the Nifty is trying to defend, a fragile bounces of course will be there. The bounces may be having a bigger range even, but that may not be treated as a turnaround or a reversal kind of behavior, because it should decisively break and close above the point of 23,300 as soon as it is possible. If not, then the rise would be treated as a selling opportunity for building further shorts. So in this manner, if the Nifty or Sensex is moving or acting, means the upcoming sessions for the fourth week of March also expected to be in a way of highly volatile with a negative tone. Because of the total structure, it got really damaged with the way of disturbance through that gap down open yesterday happened. The shattering activities happened on the supports, and really the bears taken control of the Indian market. That may be continuing in the way of impacting the downward supports and all easily getting broken, and as long as it is getting resisted around the important resistance point we have been mentioning and even mentioned in today's one and going to be mentioned, that would be maximum around the zone of, in terms of Nifty, 23,300, 23,740. So these two particular levels will be acting as a very core decider for the turnaround on the Nifty side. So if it is making the close decisively above this point, we can see the cool off in the selling spree may be happening, and because of that selling spree is getting cooled off, we can expect the upward bounce kind of activities will be getting further strengthened, and based on that strength the market is gaining, we can see the 24,079 as a very core resistance that was happened on 10th March, July, that means 10th March low point. So that should be acquired or that should be conquered to make the upward rally continue. So in that manner, if the Nifty is traveling with an attempt to breaking decisively above the resistance levels and all as mentioned here, then the bearish grip may be get lost and the bullish tone may be getting positively in. So this much of travel it should do for making a clear turnaround and making the positive flow mindset across the markets. So that is what the story we have to be in mind. But this is not a panic one. This is, of course, a technical based correction which is leading now, that is getting triggered mainly or getting incepted because of the geopolitical concerns. But this was happened not only because of these geopolitical or external factors. It would have happened even though there is no geopolitical tensions and all. Maybe bit later. But it had happened because of the triggering point due to that external factors. Anyhow, this correction was a needed one and which is only now being impacted, and that may be getting a valuation adjustment in terms of prices on the every individual stocks and sectors. So that is what we have to get clarity about the current ongoing behavior about the markets and sector stocks even. So what may be expected in case if the prevailing trend and all continuing means the chances for Nifty to test 22,800, if it is happening today, we may consider that the deeper cut on the Nifty side may be happening towards the level of 21,800 even. That should be actually giving a confirmation. After that only we can say that 21,800 can be tested like. For that, the 22,800 as the immediate core support point should be broken. Based on the current tone and the structure, it may be easily getting broken like, but as long as it is holding the yesterday's support of 22,930, we may not needed to be thinking about that kind of actions. We may focus on the bouncing activities where it is moving higher, how we can utilize that bounce, like we can consider the things irrespective of the current trend and all going to be. So the day will be on the positive side while opening of Nifty and Sensex. But the opening gains and all not expected to hold because the immediate resistance around 23,100 also there for the day. That may be resisting the upward attempt of Nifty's one. And if it is not, or if it is struggling to move above or sustaining above 23,100 for the day, any time the turnaround may happen for the day, and that could make the downward attempt again to retest yesterday's low until it is trading this kind of anxiety, and that day traders may stay away from doing particularly F&O kind of trades, unless otherwise you are getting a clear confirmation on the breakdown or a breakout basis. The positional traders who may be concentrating on deep out of the money call options, that too on the next expiry, that means April or even May also one can approach. Until it is holding this particular 22,930 as the support, this kind of positional based actions may be taken. Once it gives the confirmation by breaking down, the at the money, from the at the money till the out of the money, put options can be focused. The short sellers also may focus on the selling of the put options for attaining the upward attempt. By utilizing that, you can cover the gains with the gains. In case the slowdown or a calm down in the current ongoing negative sentiment, one can think of accumulating further on the long say, that means buying call option or selling the put options. That too would be better to focus on the April expiry. So that's the way one can approach the market in the current boiling behavior for the Nifty, Sensex, and all across the sectors, we can say. By the help of defensive sectors like FMCG, pharma, one can think of doing, those who are really risk appetite can think of doing the day trading in the cash segment. Otherwise, in the way of doing the short covering based rally and all, if the sectors like oil and gas, energy, automobile, bank, finance and all doing means, there one can see by the way of treating the immediate resistance, one can build the short positions by the way of taking risk. For those who are really a safe trader, are advised to stay away. Only the risk appetite traders can do this practice. In so, by utilizing the bounce in these stipulated sectors, one can utilize that bounce to build the short positions for the targets of recent low one can fix. So these are all the stock-based, segment-based strategies one can follow to tackle the current market volatility and movements. Amidst the ongoing movement with the volatility and all, one can get benefit over approaching in this way of maintaining the strategies and following the levels. That is the only way one can see. Really not for the safe traders, it is advisable. From the sectors front, today the major sectors with the short covering and the fragile bounces and all also may be seen for the sectors like bank, finance, energy, oil and gas, automobile, realty, pharma. The long-based opportunities barely or nacked by can be exercised from the sectors like pharmaceutical and few stocks of consumer goods. Even from the media and the telecom, maybe giving some cushion for building the long or doing the long trades. Otherwise, in all the way, no long positions aggressively being advised for day traders in these sectors. The defense sector also will be eyed for booking the profits, or if you have, or booking some trimming the way of shares if you are already holding by the way of utilizing any bounce happens in today's trade. From the stocks front, based on the news and technical behavior, Tata Consultancy Services, Tata Elxsi, Samvardhana Motherson International, Wipro, Amber Enterprises, NTPC, Action Chemical, Hindustan Petroleum, and HDFC Bank. All these stocks may be focused for getting an improved trading prospects. Most of the stocks are having a sell kind of behavior. Few stocks based on the news may be having a positive tone. But anyhow, that positivity may not be sustaining if the resistance and are getting capped or getting struggled to move above the resistance point we have mentioned here. So that's it from today's pre-market discussion. In detail we can see, and keeping stop loss is always must for every trading activities, particularly in this kind of elevated volatility without having a direction, a bigger range of movements. It is very must for all the transactions by the day traders, particularly even for the position traders who are all keeping within 1 month of holding period, also needed to be keep the stop loss strictly. We can see now a query fallen on. Can I go on P side on Nifty intraday like see as mentioned and explained in this today's pre-market discussion. Even though for buying a put option, you should utilize the bounce to buy the put option, that too on the deep out of the money in the April month series. If it is so, you can actually consider about doing the practice. If you are a risky trader, you can think of going on the same put option in the March month contracts even, because only 1 week it is going to be. And you can have a clear confidence about buying the put option once the 22,930 level as a support getting broken. After this confirmation, you can think of deep out of the money even till the 21,800 or 21,300, you can make the chance for buying put option. And if you are holding this put option, you may be getting a chance to get a huge gains. If it is for intraday only, you may be getting a very thin profit only. That is what the answer for your query buying put options. Shall we buy TCS call option today? Like, it is not advisable to go for the call option even though the positive news is there for TCS, because we are very bearish on the IT sector, as we have already mentioned about the closing below 30,000 by the IT index, NIFTY IT index. Chances for making 16% correction we have already mentioned and explained even. In that manner, the NIFTY IT index after closing below the 30,000 as a point, now it is standing around 29,000 only after making a low of 28,200. Let's see, the 1,800 points correction already done. That means from the 30,000 to 28,200 already corrected as we have predicted. So it is better to approach the IT stocks in the way of sell on rise, not for the buying purpose or investment purpose. If you are a long-term investor, you can think of accumulating a quality IT stocks like HCL Tech, Tech Mahindra, TCS, Infosys including. There you can get some benefit over holding in the long term, as it has already crossed 5% of correction. Another 10% to 11% of correction is due for the IT index, since it has closed comfortably below 30,000 level. So it is not advisable for making even a day trading kind of activities on TCS or any other IT stocks if it is leading one. The IT stocks in the second tier like Tata Elxsi can be done. By the way of approaching the Tata Elxsi, you can do buying the call options like, but with the April month expiry, it would be advised not for the March one. Then the silver gold queries have fallen now. For the gold and silver, of course, it also affecting the momentum of gold and silver. Yesterday, it has fallen over 6% based on the US gold and 10% for the silver. So international silver. Why this and all happening? Of course, it is based on the bond yields, the high, more than the expectation, the high level of investment made on the bond, which is strengthening the US dollar, which is really not good for the gold and silver like precious metals. Whenever the dollar is getting strengthened, it may be affecting the chance for getting attraction of the investment on the gold and silver. That is the major reason. Along with that, the investment shift happened from the gold to crude oil based on the recent price hike due to the geopolitical escalated tensions. That is also weighing on the gold and silver price. Anyhow, the current trend for the gold and silver is expected to be continuing with the negativity, but almost from the positional perspective, the gold after approaching the 4,400, that means 4,500 in the US gold, it may be maximum extending the correction till the 4,400, we can say another 2%. Anyhow, now it has entered into the clear buying zone, which may be used for constructing the positional based one, or if you are a physical buyer of the gold and silver, you can even utilize this chance to somewhat buying or investing on the gold and silver So which may not be having a continued leg of negative rally, because once the things are getting settled, there will be a huge upside like happened yesterday, or even more than that also can be expected on the gold and silver. That may be in the April month. So you can utilize this chance to invest, not for betting any downside approach, and it is also not for the day traders who are all looking for a greater movement on the gold and silver. It will be prudent to wait and watch until the gold and silver is giving a upward breakout confirmation. For that, you can decide the trend turnaround is happening. Like until then, it would be better to wait or apply a wait and watch formula. Do not think about any volatility will not be happening, like it could be there, and based on the volatility, it may be eroding your option side or your existing positions even. So don't be aggressive with the purchasing of the gold and silver for the intraday. It may be done for the positional one. Thank you for your queries. We can now conclude since the market is open shortly. Anyway, it would be also an opportunity. So that is why we have mentioned all the strategies and all the discussions made based on the current behavior about the market. Long-term investor, even for the medium-term investor, also can focus on Indian markets to get involved or parking their funds to get a cheaper valued, fundamentally sound stocks, which we have been also discussing and circulating through our reports, that can be utilized to make your investment behavior fruitful. Wishing everyone to have a fortune day today. Thank you for participating in today's session. In the pre-market outlook session, again, we can meet on Monday, 23rd. Don't forget, 23rd March will be dictating or will be deciding or determining the entire April month behavior based on the high and low it is providing on 23rd of March. Keep it in mind. We'll meet again on 23rd. Bye-bye.